Thank you. We welcome you all for participating in this today's webinar from the Sustainability Reporting Standard Boards. We would like to welcome our moderator and speaker of today's webinar. We would request now Amanji to introduce our speaker. Over to you, Amanji.
Thank you so much, ma'am. So as we know, the session today is on decoding the latest BRSR regulations and the global ESG reporting. The faculty for today is CA Prakhar Gupta, who will be speaking on these topics. CA Prakhar Gupta is a senior sustainability professional who leads the ESG advisory practice. He is an ICAI and a GRI certified professional. He's currently working with more than 80 plus listed entities on ESG and sustainability matters. I would like to welcome CA Prakhar Gupta and thank him for his time and efforts. Handing over the session to you, sir.
Thank you, Aman, and thank you, SRSB, the whole office, for giving me this opportunity to take a very interactive and a very interesting session on how the overall reporting is evolving. And we'll start by doing a deep dive into India's reporting structure, which is BRSR, and then we'll also go into what are the changes which are happening in the ESG and BRSR reporting space, and then we'll swiftly try and also cover the global reporting space, because that is also evolving at a very fast pace. So the idea is to also give all the listeners, all the participants, an understanding on how overall global reporting space is also evolving, along with how the BRSR is evolving. And then at the end, if time permits, we'll also touch upon the climate reporting frameworks as well. So these are the three broad sections in which we will cover our session today. Let me just quickly share the screen. Office can confirm if the screen is visible. 1 second. Can you see the screen?
Yes, sir, it is visible.
Great. And I am loud and clear, right?
Yes, sir.
Great. So let's deep dive into the session, which is decoding the trends in ESG reporting. So let's first understand what is the overall reporting space looks like, apart from BRSR, which is one of the definitely a center point which we will be talking today, which is mandatory for top 1,000 listed companies since almost now 3 years, which, as we speak. Apart from there are various other moving pieces which I want to touch upon, just to give you a perspective of how the overall ESG is evolving in the country, or ESG reporting is evolving in the country. So apart from reporting, there is also a mandatory requirement of getting assurance done for top 250 companies as we speak. So till last year it was 150. This year, which is 24-25, as the year is running through, the mandate will come on top 250 companies to get their report also, the BRSR report also assured with a reasonable assurance. This requirement, which is gradually already defined to increase. Next year it will be 500 companies, and then eventually 1,000 companies will be covered by 26-27. Apart from this, there is also a value chain mandate, which we will touch upon in later slides, wherein that was mandated for this year but has been pushed for next year. So from next year onwards, top 250 companies have been voluntarily asked to start reporting on the value chain parameters as well. So not just your data, these companies have to pull the value chain data also and then start publishing in their report separately as a part of an exercise wherein they will reach out to these top 250 reach out to their value chain partners. These top 250 companies will reach out to their value chain partners and then start collating the information, putting it in their BRSR report. So that these are the three core mandates which are related to BRSR. Now, apart from this, interestingly, even India has a rating regulation. So under this ESG rating regulation, there are already 16 companies. I'm not sure. I mean, there's a detailed list which has been there on the SEBI's website, but I've added few names, which is CARE, CRISIL, and MSCI, and there are few more. So there are total 16 companies which have already got a license to operate in India as a ESG rating agency. So these rating agencies will also start pulling the ratings and scores, and especially, I mean, because in India BRSR is a mandate, most of these ratings for most of these companies will be hosted on the data which has been published in the BRSR report itself. Obviously, they are also pulling ancillary data from different other platforms and uses, but the base data structures will be the BRSR which companies will be publishing. So this is again a very interesting thing which will start coming in the main limelight as of now. It is not, some companies have already started receiving ratings, but it is not still in the limelight. Apart from this, there are other small regulations which are out, like for example, green steel guidelines. Recently, India has also published a green steel guideline wherein officially they have come up with a tag that how much emission, what is the limit of emission will be permitted when a steel will be called as a green steel. Similarly, apart from green steel, there are other guidelines are also being talked about, like for example, Harit Sagar scheme, which is targeted towards defining green ports. There is also a greenwashing guidelines which has been published by Central Consumer Protection Authority, which has structured and mentioned that when a disclosure will be correct, will be a product based environmental disclosure will be tagged as a correct disclosure, and when it will be tagged as a greenwashing, which is happening. So even that guideline is out and live. In financial market also, there are several different things which are happening. I mean, ESG themed mutual fund was already a law, and that is being progressing. So all mutual funds which are tagged as ESG theme funds, they have to mandatorily invest in companies which are publishing BRSR in India. Otherwise, they can't invest in these set of companies. There is already a stock exchange, which is a social stock exchange, which is active on both NSE and BSE markets. And now even the listings have started increasing their, I mean, the new listing which has started happening in these stock exchanges as well. Apart from this, there is a green bond regulations on green bond, which is active as we speak. There is a draft circular which has been out on carbon credit trading scheme. So as there is already a guideline available on renewable energy certification schemes. How do you trade renewable energy certificates in India? There is a guideline. How do you list a green bond? There is already established guideline. What has also come up interestingly is that both RBI and RDA, the insurance authority and the banking authority have already published a draft circular stating the banks to adopt the climate related financial risk. So this also we'll touch upon later in the slides, but this is something new which is happening in India right now, wherein a mandate is coming to start reporting on the climate risk, because BRSR is not touching as much dedicatedly on these kinds of risk. BRSR is largely talking of general environment, social governance risk, but it is not very much focused on the climate related risk, which is something which the new guidelines are coming, and banks have been sort of put a draft circular. It is not yet a guideline, and it is proposed to become a guideline in near future. So these are few of the other regulations which are growing in country right now, apart from just BRSR reporting. So BRSR is just one piece, but there are a lot of different areas, different sections, different ministries which are hovering on the sustainability and green guidelines as we speak. Now coming on to the BRSR and how the BRSR has evolved as of now. So if you see, and just to recap, I mean, it started with when SEBI published a circular saying that India has to adopt the NGRBC guidelines, and they published the BRSR reporting as a framework which is aligned to NGRBC guidelines. It becomes mandated in 22-23, and there onwards there are already 2 reports which has been published on a mandatory mandate. So 22-23 was the first report. 23-24 was the second report by top 1,000 listed companies, which has already been published. So there is already a sense of maturity which has come in the reporting. Very quickly touching on the structure of the report, the report is divided into 3 broad categories. It starts with general disclosure, management disclosures, and principle-wise disclosure. General disclosure talks about basics of organization, where is the presence, how many markets the company is operating, what is the diversity, what are the risks company has, which market the company is active, what is the market cap, whether the report is assured and not, and so on and so forth. Management disclosures largely focuses on the governance framework, which is asking questions on how the overall sustainability is being governed within the organization. So what is the policy, which is the highest authority, whether the policy is being approved by the board, whether there's a statement which also being asked from the highest authority within the organization. There is also a requirement which states that at what is the delegation process, which committee is taking charge of overall sustainability within the organization. So all those questions are housed in a management disclosure, and then you have 9 principles, which are 9 different areas in which the questions have been asked. And each principle, there are further bifurcations of questions into essential and leadership indicator. There are also multiple versions of the report, which is you have light, comprehensive, and core right now. Light is almost on the verge of, there's nothing which has come up once government has announced the light version. With comprehensive version, there's no further update which has come, and there's no adoption as of now with respect to the light version. So literally there are only two broad versions, which is comprehensive and core. And when we come on the next slide, I will also talk about that there is literally only one version, which is comprehensive, because core itself is a subset, which I'll come in the subsequent slide. So that's a quick review of what BRSR is all about before diving into how it has been evolved. So talking of evaluation, as I said, 2021-22 was the first time when BRSR was implemented, and it was implemented as a voluntary guideline. Companies have been asked to voluntarily adopt it, and they were given a cooling period of 1 year. In 22-23, a mandatory requirement has been pushed on all the top 1,000 listed companies to mandatorily report on these guidelines. So this is the first year in which people have, these companies have reported uh, uh, on BRSR guideline. In 20 to 24, there was a major amendment which happened in this report. There were new fields which were added. There was something which is known as BRSR core, which was announced. The whole BRSR structures were added, and there was new fields which were inserted to align it with the BRSR code guidelines. There was also a mandate of assurance, which we were talking, which was first time introduced in 2023, and also the voluntary value chain reporting guideline, which was introduced for the first time. So these are four major updates which happened in 23-24 with respect to BRSR. Now, after the implementation of these guidelines, there are a lot of voices which were raised, a lot of industry submissions which have happened, and the idea was that it has become very bottle time, very difficult to implement whatever has been suggested in the 23-24 guidelines. So, government this year published an ease of doing business guideline, wherein they've tried to sort of understand what industries' pain areas are, and then they've tried to reduce some of the expectations to a level wherein in certain cases there is a buffer time which is given. In certain cases some requirements have become voluntary, which I'll touch in the next slide. So this is how the evaluation as we speak is happening on the BRSR journey. Moving forward, now when ease of doing business, which is this year's guideline which is announced, there are three broad bifurcations in which the changes were made. The first was the ESG disclosure for value chain. So as I said, in 23-24, the first time something which is known as value chain reporting was introduced in BRSR. So top 250 companies have been asked to start reporting on their value chain. And last year it was voluntary. This year it was expected to get mandatory. There are some certain companies which have already started it last year because they want to get, they want to be the first movers and adopt early. So there were a lot of pain points which were highlighted by the industry when they started doing it. Like for example, the ask was to collect the data from value chain partners of last 2 years, and the years were aligned to the reporting year as well. So this was causing delays in submissions of the report of the companies itself. So for example, if let's say for example I am Tata or Reliance of the world, if I have to reach out to my value chain partner, I have to reach out to first of all at least 75% of the value chain partner, which is very large in size. So, and reaching out to everyone and getting the data for 2 years was causing a lot of delay for Reliance itself to publish its report, and or be any other company to publish its report. So that was creating pain, and that was being highlighted to SEBI. The other concerns were that it's very difficult to reach out to smaller companies because they don't have data in place, and it's very difficult for a smaller organization to collate such amount of data and publish it to the organization. It was impacting the relationship also between the customers and the suppliers. So keeping all of these things in mind, there were a few amendments which were introduced this year. The first is deferral. So the whole guideline was deferred for 1 year. So now the implementation will happen from 25-26 instead of 24-25. The second thing which was done was the implementation was made voluntarily. So earlier it was mandatory for top 250 companies. Either they have to comply or they have to explain. The word users comply on or explain basis. The word has been replaced with voluntary adoption. So top 250 companies have also been asked to voluntarily adopt it. They can choose not to adopt these reporting guidelines on value chain partners. The other thing which also government did was, which SEBI did was, they have also introduced a cap of 2%. So when you are defining this 75% of the value chain, you have to only consider the value chain partners which are contributing more than 2% of your sale or purchase. Either way. So if it is upstream, they are contributing more than 2% of your procurement. If downstream, they're contributing more than 2% of your revenue. So with this, there are a lot of reduction in numbers which have happened. Till last year, companies were struggling with almost 1,500 to 2,000 value chain partners. It has gone down to 40 to 50 maximum value chain partners is now there to work around and get the data from. Additionally, what was also a mandate was there was a assurance which was being talked of. So that assurance has also been changed with an assessment. So there is something which is a new term which has been introduced is assessment. So assurance and assessment, there are two terms which have coined for the first time. So assessment is coined for the first time in this guideline, and the power is to define this term is given to industry standard forum. So what is industry standard forum? It is a forum comprising of ASSOCHAM, FICCI and CII right now, and they have been given the power to define this term. So the definition is yet to come, and this has been shown as an alternative of assurance. So because assurance follows a very strict guideline, it has to follow either ISA or AA or SAE principle. These guidelines are expected to be not that detailed. So again, depending on what comes out, yet we are waiting for updates to come from ISF. There's no further update which has come in as of now. So that's where the status is. And the third thing was introduction of a new column, which is known as a new disclosure, which is known as green credit disclosure in P6. So under P6 leadership indicator, a new disclosure is added. This is the only new disclosure which is added this year in the BRSR as compared to last year. So this disclosure talks about how much procurement or generation you have done for green credit, and among your top value chain partners, top 10 value chain partners, how many of them have bought green credit or generated the green credit? But surprisingly, still the guidelines have yet to be formalized in India. So it's only right now a structure had been announced in terms of what is green credit, but a detailed guideline how to get the credit and all is yet to be published. So it's sort of ahead in time inclusion in BRSR which has happened. So I think because government don't want to make it sort of a delay in update, so they have used this opportunity to add this also as a part of disclosure right now. But there's nothing which eventually be reported because there's no established guideline as we speak. So this is mainly the changes which were announced from a BRSR perspective on an ease of doing business, which is last year. Now, quickly coming on the another important concept, and there's a lot of confusion with several people since the BRSR core was announced, and I thought I'll touch upon this part very quickly. Several even companies are of when you discuss with them in industry, they say, are we publishing BRSR or are we publishing BRSR core? So I just wanted to sort of quickly make this also clear that there's only one form or one framework which is known as BRSR comprehensive, which is going since 22-23 and then upgraded to 23-24. What is BRSR core is just a subset of BRSR. So the overall guideline or the reporting still remains the BRSR. So if a company is publishing a report, they have to publish a BRSR report and not a BRSR core report. So that is first thing. So if these top 1,000 listed companies has to publish a BRSR report. Now what government did was they have amended the BRSR to include all the fields, additional fields. There are some new fields which are being coined in BRSR core that was incorporated last year itself in BRSR. So the BRSR already have all those fields which are being formed part of the BRSR core. Hence, it's a subset of BRSR. So that is one thing which, so when you are talking of reporting, it is nothing but BRSR which you have to report. What is the need of BRSR core is, BRSR core has those selected parameters of BRSR, which will go in assurance. So when there's a mandatory assurance which have been called off, government has said you don't go, or SEBI has said you don't have to go and assure the complete BRSR. You have to only assure these limited fields which we have picked up, which is of most importance to everyone, all the stakeholders. So these are some of the fields which you have to go and get assured. These are 9 attributes, to be very frank. There are 9 attributes which they've selected, and these 9 attributes will go for assurance. Same way with value chain reporting. When you are collecting the data from your value chain partner, you have to only focus on these 9 attributes out of the complete BRSR while you are collecting the information. So that is something which is as a structure they have designed, wherein they have announced a subset of BRSR in terms of BRSR core. So apart from the update which has come from SEBI post their meeting and the changes, the ISF, which is the industry the forum which was created by ASSOCHAM and CII, they have also come up with a standard on BRSR core. So it's a guidance or a clarification which they have published on several elements of BRSR core, because industry was also facing confusions with respect to some of the terminologies which have been used in BRSR core. Plus, there are certain concerns which have been raised by the industry which were answered in this publication. So we'll just go through one by one these clarifications which have been issued. And some of these are very interesting to discuss. So I'll just take some more time on some more clarifications when I will come on them. And I'll also while discussing these clarifications, also try and highlight the concerns within the industry with why these clarifications have been issued. So there are two types of clarifications which have issued: general requirements and attribute specific requirements. When you say general requirements, there are certain definitions which have been clarified, like for example, intensity based calculation. So in BRSR at several levels, they have talked of intensities. Like for example, in principle 6, you have to define you have to mention the energy intensity, emission intensity, waste intensity, water intensity. Now, there were some confusions while calculating this intensity. The first, and that's how these guidelines have come in to clarify that how do you have to calculate these intensities. Like for example, the first one, which is revenue based intensity, also known as purchasing power parity calculation. So the PPP intensity, one was a general revenue intensity in rupee term, which is simply just, let's say example, if I have to calculate an emission intensity, I have to take total emission and I have to divide it by total revenue during the year. Obviously, revenue itself is a term here which has been defined by the authority, by the government this year. The other calculation was PPP adjusted intensity. So your value, which is in INR terms, has to be converted into a dollar term or a USD term, which is a PPP adjusted revenue in USD. So there is a conversion methodology which has been defined this year by this guideline, which has been published by the forum. So they have said you have to, in order to calculate PPP adjusted revenue in USD, you have to take the revenue in INR and divide it by IMF CPF conversion factor. And this is the link which you can use to go there and search for that conversion factor. So every year this conversion factor is announced, and this is announced, and then you have to just go on that website, go on that link, and then take up that factor and then multiply it with your revenue, and you will get a PPP adjusted revenue in USD, and rest is same. So total emission has to be divided by this PPP adjusted revenue in USD, and you will get a PPP adjusted intensity for you. They've also said that you should also clarify in your footnote. So when you are doing this calculation, give the conversion rate which you have used. What I've also stated is, instead of giving conversion rate, you should you can in fact give the full formula, because that it gives ease to the user to understand and read at there and there itself that how the PPP adjusted factor or PPP adjusted intensity is being calculated. So the forum has clarified that you should publish a footnote along with this calculation. So this is from a revenue based intensity perspective. Now, interestingly, the challenge was more with the output based intensity calculation. There is also a calculation in the same section. The third intensity which you have to provide is in terms of physical output intensity. So now there was a challenge which most of the companies were facing, wherein how do you define a physical output or a output based intensity, especially in case of a firm which is not a manufacturing firm, which is a service firm. So that has been clarified. Good, it has been clarified. So in manufacturing sector, it was simple. So total production which has happened in case of SKU, how many number of SKUs which have been produced. Let's say example, if it's a steel unit, how many tons of steel the steel unit has produced. The total emission has to be divided by the number of production, the production which has happened during the year. So that will give you per product intensity, per SKU intensity. Now in service sector, the clarification will come wherein you have to take the FT input, you have to take instead of output, because if you see from a service industry perspective, the output is usually in terms of revenue. There is no physical output which has been generated by a service sector unit, and that's the reason. If you pick reports from last year of several service companies, banking companies, there are several companies who have left this column as blank and they've not reported anything. And because of the same reason, now the clarification will come wherein they have said that you can use FT, which is what is your input. So if you see in case of our service sector, usually employees are taken as a major asset of that company. So how much FT which has been put in, which is full-time equivalent hours or full-time equivalent numbers which have been put in, becomes a base, and on that basis you calculate your intensity. Now, even there's further challenges which were not answered. There are more practical challenges which were not answered, and a few of them are as follows. Like for example, what will happen in case of a conglomerate? Let's say for example, a company like Tata's of the world, a company like Reliance of the world, they have hundreds of SKUs, hundreds of different products. How do you come to a conclusion? What is the total production which has happened? Because reporting is happening at the company level, and at the company level you might have different products. So that is still unanswered in terms of how do you resolve this mystery. Now there are certain companies wherein they convert the product into equivalent. Let's say, for example, if the products are still comparable, they will compare and convert that into an equivalent product. So let's say if the base is steel, and they will then convert it into a per unit or per metric ton equivalent of all their product. If a company is manufacturing automobile, they will take number of automobiles and various range and shapes they have manufactured. So companies were trying to get that number by coming to a converted number at that level, but still this is something which is still unresolved. It's very difficult to calculate emission intensities at that level. The second was also challenging for an infra sector. Let's say real estate, it is still easier. How much construction has happened in terms of square feet, you can still take that, or how much square feet has been when went into a maintenance. Real estate can still take that value as a base, but for an infra, again, it's very challenging. If you consider infra companies are building roads, they're also building ports, they're building bridges. So what could be the base they would take? Again, there was a struggle going on last year. Certain companies took uh, converted numbers of how many kilometers of constructions they have done during the year, but it's become challenging again in the case of a port, in case of a bridge. If they take a square foot basis also, then roads becomes a challenge. How do you convert all of that numbers into square feet conversions and factors? And also there's still a challenge which remains even for an infra sector company. So these are some of the challenges which are still remain unanswered even after the clarifications which have been announced, which might require further deliberations within the industry. On the next general requirement which have been published was on spend-based approach method. So there is a formal adoption of spend-based method approach which have been announced by this by the clarification. Now there were several companies, and why it has come in is mainly because there were several companies which were facing a lot of challenges in getting the actual data, raw data on ground. So for example, if I have to calculate emission, I should know that how much electricity have been consumed on ground, or how much fuel I'm consuming on ground. And if I have to calculate, let's say, for example, water consumption, I have to first understand how much water is being consumed in several different locations which I have. So for example, take an example of a company which is having, let's say, 2,000 to 3,000 locations, smaller locations like a bank. It was becoming fairly difficult for them to get this data from these all locations. And because of that reason, there was a ease which has been now that the companies can go on a spend-based methodology. Now, it's not that has been adopted for the first time. There is already a predefined spend-based method available in the emission calculation space also. They've just formalized it. So they've given a separate annexure, which has been published by FICCI separately. And this annexure, for example, for emission, this link I have pasted this. If you open this link, you'll get factors which you can directly consume from this circular or this document. So they've given factors on petrol, diesel, various states and their average electricity rates and also. For example, if I just jump into financial, and if I could able to find out that at each of the state how much money I have paid for electricity in each of these states, I can use these guidelines and then convert that that rates or that spend into the consumption, and then follow the same methodology. Once I get the consumption, then I can calculate the emission factors and then multiply it by emission factor and get the emission done. Same with water. So for water also, there is a standard guideline which has been published, or in fact, it was there already. It has been adopted now by formally to be used in BRSR. So again, this is a guideline by the Central Water Authority, Central Government Water Authority, and it states of average consumptions in offices. Let's say it's the same situation. Let's say there are smaller offices, smaller retail stores, something like, let's say, MedPlus. There are companies like Kalyan. There are companies like SBI. There are companies like several different insurance agencies, which are very small offices spread across the country. Now, the challenge for them is for each of these locations, it's very difficult for them to get the water consumption, because in certain cases, not even certain, most of these cases, these are rented premises. There's no water meter. They can't even install a water meter because it is coming directly into their premises. They're using bottled water and so on and so forth. So there are estimates which have been announced. Like, for example, this guideline says that you can assume average of 45 liters of water consumed by per person per working day, and then report based on number of FTEs. So they have given an alternative on spend basis. So there are these two areas in which alternatives were announced. to be used from an emission and water perspective. That if you don't have a actual data, you can start using these factors. But now still, one of the questions still remains which were not answered is waste as well. So there are, again, if I take examples of the similar agencies and waste is generated across of these locations, it's very difficult for companies till the time they mature their systems to track the waste which has been generated in all of these locations, especially the service companies where the majority of the waste is in form of smaller plastic water bottles or papers at max, which has been generated. Although companies have matured a lot in last 2 years and they've already implemented systems to track these waste because there are guidelines available and there are also softer soft regulations which are available in these space and which asks you to monitor your waste. But still said that on ground there still remains a challenge. So this challenge has not been sort of touched upon while talking of when these guidelines are talked about. So similar to water, similar to emission, waste also has a similar challenge right now, which is unresolved. So these are two of the general guidelines which have been talked about. Now moving on to specifics, which is attribute wise. As I said, there are 9 attributes. Hence, attribute wise, there are certain guidelines which have been issued. So the first is on calculating the emission. How do you calculate the emission, which is greenhouse gas footprint? This is one of the most important attribute in which goes for an audit, which has planned. I mean, which is scheduled to go for an audit as per the timelines, and this is also the same thing which you have to also collect from your value chain partners. So there's a further clarification again. Uh, the clarification says that in case of scope 1, these are the factors. Formally, the government has announced few factors, like for example, EPA, DEFRA, IEA, IPCC, and NABL accredited labs. They have announced the factors, which these factors can be considered while doing the calculation of emission. So usually when you calculate scope 1 emission, let's say for example, scope 1 emission is something wherein you calculate the emission generated out of direct uses of fuel. So for example, if I'm using diesel in the DG set, how much emission I have done while using this fuel, which is diesel, while diesel is consumed in the DG set. So I'll need the consumption number, which is the quantity of diesel which I've used. For that, the spend-based methodology could be an option, because if I don't have the track of how much diesel I have consumed, I am surely will have a track of how much expenditure I have done to buy the diesel. So I will convert that and get a quantum of diesel with that guideline. Now I need a factor, which is how much emission do I multiply with this quantum. So for that factor, these are some of the areas which have been announced. These are some of the repositories which can be referred to. Obviously, there is a methodology which is known as JG protocol. You have to follow that protocol, and in that it defines the order. And this order, the same protocol needs to be followed while even calculating the emissions for BRSR as well. So uh, what has also been additionally asked is you should also write a footnote that what is the emission factor you have used, from which library you have derived this factor from. You should give information to all of these guidelines as well. Now coming on to scope 2, which is the emission generated from usage of electricity majorly. So if you are buying electricity or buying any other source of energy, let's say for example, you are buying a heating source or a cooling source, in most of the cases in India, it's only electricity which has been bought in India. So let's say for example, if you're buying electricity, how do you calculate the emission of electricity? Same way, you have to define the quantum of consumption you have done, and then there are grid specific publications. Although right now as we speak, there's no grid specific publication happening in India, but there's a pathway. So currently India is announcing a consolidated number of emissions. So at the country level, India is announcing an emission factor, and there's no grid level emission right now available as we speak. So this country level emission factor has to be used while doing the calculation of emission. As I said, spend based method is an option if you don't know, which is not an acceptable case, specifically in case of electricity, because everything is mentioned on the invoices or on the bills. You can easily track it out. But there's an exception which have been built in this year, that for initial years you can go on spend based method if you don't have the systems in place. You trace out the spend, use the spend based methodology options which are given in the previous slide, find out how much consumption you have done, and then, as I said, find the relevant emission factor, multiply it, and then disclose. So that's how you will then take the scope 2 emission factor into consideration. Then the second attribute, which is water footprint. Again, as I said, there are some clarifications which have been announced as well, and I've largely give you the context of the problem, and the direction is the same when they've announced the the clarifications. The first is of cases, especially office, outlets, branch, facilities where direct measurement of water is not available. And largely these are places wherein you are on rented premises, a smaller office, you don't have your meters in place, and you don't have the capabilities also. You have to take permissions and all. You can't put meters in all of these locations. So the guideline, as I said, states that you can consider 45 liter per head per working day for offices. So where there's no manufacturing happening, largely the person is drinking water and using washrooms during the day. This is the average consumption which has been defined by Central Groundwater Authority Agency. This consumption factor can be considered while doing the calculations. It could be a factor directly which can be used. The alternative thing which has also been talked about is, let's say for example, you don't have a consumption factor at the subunit level. Let's say I have a shop in a big mall, but the mall at the mall level, I know what is the water consumption which is happening, but at the shop level, I don't have that. So there's a conversion factor, which is again an acceptable conversion factor. So you have to just divide the total area of the facility, multiply it with, I mean, and identify the per unit facility level consumption and multiply it by your area. So how much area is your shop covering? You can directly take an intensity and multiply it with that level, and then you will get the consumption of water at that level. So again, it's a straightforward formula, but it has been formally accepted in this guideline to calculate the water volume of water consumption. Similarly, the third attribute is energy footprint. Now, there are several scenarios which plays, especially in today's world. There's a lot of renewable acceptance which is happening in the country currently as we speak. There are various people who are putting their solar panels on the floor, on the roofs. They are investing in solar. They are investing in wind, and there are various models in which the billing is happening. So on that perspective, the guideline is touching on. So let's say, for example, if I have a solar panel in place, the first scenario could be I'm directly consuming that energy into my premise, and I'm only drawing the net energy from the grid. So that is first scenario. The second scenario could be I am not using any energy generated from the solar panels, and everything is going back into the grid. And then I'm getting a bill which is a net bill of what has gone out and what has come in. And there is a net factor which is being, so both the values are mentioned, the total consumption is mentioned, total net metering is mentioned, and eventually I have received a net amount which I have to pay because I'm getting the credit of what is going into the grid. So that could be the second scenario. The third scenario could be there is a park which has been established in some part of the state, and I'm drawing electricity in some other part of the state, but still I'm getting the benefit of what I have invested in solar park, and that is because government is considering that also is going into the grid, not directly from the premises, but from some other premise. So that could also be a scenario. There could be a fourth scenario. If you see in Mumbai, especially, there are already grids which have been announced, which are 100% renewable grids. Like for example, Tata Power as a grid. In people who are from Mumbai, they will be knowing it. There are some other places of the countries where these renewable grids are announced now. So if you're drawing in electricity from these renewable grids, 100% of the energy is green. So you have been paying a green tariff, and then there is a certificate which is coming along with that electricity which says that it's a green energy which you're drawing. And the last scenario could be normal grid. You're just drawing. There's no renewable in place, and you're just drawing the electricity. So there could be various scenarios, and the guidance is just touching upon that point that there are various scenarios you have to consider while consuming the energy data. Now, what could be the better scenario would have been that they would have given examples, and there's some standardization which should happen, because right now at various state level, the billing process, the metering, the numbers and how it is being presented is not standardized. So that standardization is something which has to happen. And the guidelines should have also come up with certain examples, so because there are various ways in which the bills are being published state to state. Some units are also varying, and also standardization is a problem in this scenario. So if that would have also been added, that would be a complete guideline in itself. So that is largely from an energy footprint perspective what the BRSR guideline is talking about. The fourth, there is nothing being announced on the fourth. It has been said that on that attribute directly you can, which is a waste collection. The fourth attribute is the waste or circularity. It has been said that whatever has been said in the BRSR core, you can directly adopt. There is no clarification to be given, which was sad. So as I said, there are gaps even in the waste collection and waste data as well. There's an opportunity where we can sort of at the industry level adopt certain standard methodologies to ease out the pain of the overall industry. The fifth is on enhancing employee well-being and safety. Again, this is the fifth attribute which we are talking of. And the attribute which we are talking of, the sub attribute is cost incurred on well-being measures as a percentage of total revenue. Now, very interesting. Now, again, if you see this word well-being measure, cost incurred on well-being measure was not defined till last year, and the people are taking interpretations on their own. Uh, there could be several things from an employer perspective which can go and sit in the employee well-being space. I'm announcing offsite. There's a lot of money I'm spending on offsite. Should I cover that part as a well-being or not? I put a big gym in the office and that is only dedicated for employees. Can I put that as a part of well-being or not? So there are various expenditure heads which could happen, and that's the concern which was being raised last year. And you will see a lot of diversity in numbers also which have been published because of the same reason. Now this clarification has come up saying that mainly these 5 heads you have to cover: health insurance, accidental insurance, maternity benefit, paternity benefit, and daycare facility. Additionally, they have also talked about that. Additional to that, you can also cover any measures which you are doing on health and safety measures, including access to mental health. So, for example, if you are running a mental health well-being program within an organization, if you are running some health checkup camps and so on and so forth, all that could be included apart from these benefits. And they have also gone in detail. So it has to also marry with the ledger. So ledger and P&L. So they have said that in case of listed entities, these listed entities should also prepare a separate schedule while doing the calculation. And that schedule should also be sort of made available to the auditor when auditor is coming to audit. And this schedule should match with the audited trial balances. Now, under this schedule, these are some of the defined costs which you have to consider. The first is on actual cost incurred by the company on health insurance, accident insurance, daycare facilities, and so on and so forth. If any cost is borne by employee, that should not be covered. Let's say, example, you are also claiming some reimbursement from the employees. At one side you're paying to the agency, and the other side you are claiming it back from an employee. That need not to be covered. You should not cover it. But however, there is a specific scenario which have been emphasized, which says that if you have negotiated, let's say for example, if directly an employee would have bought that insurance, it would have cost him 100. Based on your negotiation, it has cost him 50. But you are not contributing anything. The 50 is being paid by employer and the 50 is waived off. In that scenario, you have to put a note only. You don't have to cover that cost because it's not a cost for you. So you can put a note at the bottom saying that these expenditure I have saved for my employees, not a direct money which I put it in his pocket. The next thing is parental benefits. So benefits related to maternity and paternity leave should include any direct benefit, including salary. So the salaries during that period, actual salaries which are paid at the time of leaves which have been availed. So example, in case of maternity leave, the 6 months leave, whatever salary which has been paid during that period, including the variables if have been paid, can be considered subject to companies maintaining that record. So if the company is not maintaining the record, it would be very difficult for them to segregate and then take that information. If they are maintaining, if they can segregate, they can take that value also in this cost of well-being. And lastly, they've also defined the cost incurred by the company on health and safety measures, mental health, medical benefits to employees, annual health checkup, provision for doctor, counselor, fitness programs, and so on. So anything related to health and safety largely is being covered as a part of cost incurred or cost incurred on well-being. Now the next, which is the sixth, sorry, in the same bifurcation, the second part is revenue. So if you see, there is also a division of revenue which is happening, which is total revenue. So what do you mean by total revenue in this case? Now, in general, the total revenue means revenue from operations, and you should not cover other income. So only the revenue from operation has to be considered, which has to be taken from audited P&L. Especially in case of BFSI, they have given separate clarification that revenue shall mean interest earned and any other income except profit and loss on sale of building and other asset. So that has to be excluded. Apart from this, everything has to be covered from a BFSI perspective. So even revenue term has been defined. So there are a lot of terms you'll see going forward. Government, this board or this agency has defined a lot of terms which were creating a lot of confusion still last year, and hence the variability of the numbers because there's no standardization which is coming while reporting. In the same enhancing well-being, the next question was number of permanent disability. Now, what BRSR code did was the term itself was new. This term was not there in the BRSR itself, and that was creating a confusion. So this clarification is just to link two different terms. wherein they've said number of permanent disability means the same, which is high consequences, injuries, and ill health, which has been reported in BRSR. So both the numbers means the same thing. That's the only clarification they've issued, that don't get confused with the names, different names of in both the headings. But this is what it means by when you say number of permanent disabilities. The sixth attribute is enabling gender diversity in business. Now, the first question in that is gross wages paid to females as a percentage of total wages paid by an entity. Now, the word used here is wages again, but again, what this guideline has done is that it has defined the wages, which means salary, wages, bonus, as per the disclosure made in audited financial statements. Which for a BFSI, it also will need to, you have to extract payment to and provisions for employees. So any provision you have to extract. It should also exclude retirement benefits, ESOP, staff welfare expenses, on which is part of if being treated as a part of the salary. It will include bonus accrued but not paid, maybe a portion, so that you can apportion between male and female if that is already being defined. Now, for other than permanent employees, actual wages paid to non-permanent, to these other than permanent employees and workers has to be considered. So actual wage, actual amount which has foregone has to be considered. So the definition has been defined. What do you mean by total wages paid and the wages paid to females? So you have to just then segregate the wages paid to females and divide it by the total wages paid. You'll get this number. Again, a new inclusion which was there last year was complaints on POSH as a percentage of female employees and workers. Now, if you see the denominator, it's a number of employees and workers. Now, interestingly, and which goes up against with other numbers which have been published in BRSR, in this situation, the forum has said you have to consider the average count, average female employees at the beginning of the year and at the end of the year. I'm not sure why this is done, because in other cases, the end of the year, which the number has been taken as end of the year. Especially in this case, they have said that you have to take an average. So that's the guideline, and this is something which is unique as compared to other guidelines of BRSR. The next is on complaint of POSH upheld. So how many cases have been upheld? So how do you define this term upheld? So they have been defined that they are saying that whichever cases which have been accepted by the internal committee after the inquiry, and they've said and they have concluded that it's a proper allegation, it's an actual allegation which has been proved as per the section 13 of Sexual Harassment Act, Harassment of Women at Workplace Act. Those complaints will be qualified as POSH complaints, which are POSH upheld. So this upheld term is defined basically. Coming on to the seventh attribute, which is enabling inclusive development. Now this question was updated last year. Till last year, the question was directly sourced from MSME and small producer and procurement within the district and nearby district. This was the question which has been updated to within the India. Now, with respect to the definition of MSME, small producer were defined in the guidance note itself. So when this amendment, the first time when the BRSR was announced, there was a guidance note which was announced, and in that the small producer was defined. MSME is defined as per the MSME definition. There is no change in the definition of what is MSME. Small producer is also a well-defined term. What they've done is they've defined the procurement. What do you mean by input material or purchase? And surprisingly, they've added everything. So you have to take all procurements. Raw material, spares, service, even capex. Everything which is being dealt with a third party has to be covered. So in terms of when you say third party, apart from let's say employees or investors or debt providers, you have to take that all the procurements which have been made other than these partners. So that has been defined. And improved material in the form of service, when the material is input in the form of service, it shall include all procured third party. So everything which is related to third party has to be covered in the input material. So input material itself is expanded to include service, so as total purchases. Everything, everywhere they've said that you have to include everything with respect to capex, with respect to service also. Same with job creation in smaller towns. So now, how do you calculate this value? There is a formula now they have attached. Obviously, nothing new. It's again straightforward in terms of how do you calculate. So total wages again, which is predefined above, plus the total contractual payment for labors in specified location for all employees, whether permanent or contractual. So this is the total value of money which has been paid to that class divided by total wages paid to overall company. Within overall company, the same number. You have to multiply it by 100, so you'll get a percentage you have paid in that given location. Now the challenge here was still last year and still continues to be a challenge is how do you classify a location as a rural or a urban or a semi-urban. So if you read this provision, there are 4 bifurcations in which you have to give the money you have spent for your employees. So you have to divide it, either you have spent in rural category, urban, semi-urban, metropolitan. The challenge remains that how do you first classify where it goes and sits? Money goes and sits in rural, urban, semi-urban, so on and so forth. How do you do the clarification or the bifurcation? You have to use an RBI classification system. This was well specified before also. It's something, nothing new which has been specified. But the challenge starts when you start using this guideline, because that guideline, when you go on this guideline, first of all, the data is very old. There are new states, new districts created, and it's a continuous process. Every few years, you'll see new locations created, population is increasing. So if you see the RBI circular system, it is focusing on the population based methodology. So what is the population? On that basis, you have to define that location or branch. Obviously, the counter argument could be currently branches are also being tagged with the same. So if it's a BFSI sector, it's easier. Banks knows which branch it's a rural branch, urban branch, metropolitan branch, because as per RBI, they have to every after a period they have to update their status of these branches as well. So they know all of that. It's easier for them. It's challenging for other companies, especially manufacturing companies having manufacturing locations across these locations. So that still remains a challenge, because using this classification system itself is a challenge. And there's no clear-cut methodology. Then how do you calculate, how do you define, and how do you arrive to that conclusion that's rural or urban? And there is a scope right now available for discrepancies and not the consistency. So this is something which has a practical challenge right now, so it remains. Point number 8 is fairness in engaging with customers and suppliers. Now, one question which I've been asked is percentage of data breaches. So what do you mean by data breach? That has been defined. Earlier it was not defined. So they have given a new law. They have quoted a law which is there's a reporting which happens, which is known as certain under the Indian Computer Emergency Response Team guidelines. It's under Ministry of Environment and Information Technology Act. This reporting has to happen. And wherever the number is reported in certain, that number has to be taken for the calculation purposes. That's the simple bifurcation which has been added. The 9th attribute is the openness of business. This is the last attribute, which takes off number of days of accounts payable. Now, again, this bifurcation itself is also there's a clarification which has been issued. And for the BFSI sector, BFSI sector shall include relevant items under other liability schedule as reported in the financial statement. So it's a predefined term for a manufacturing business. What is account payable or trade payable? The challenge was with BFSI sector. What do you include in that value? So it has been clarified that other liabilities has to be considered, and that has to be reported as a part of denominator, as a part of numerator. Sorry, under denominator, wherein the cost of goods sold or service procured comes in. This is linked to attribute 7. So if you remember in attribute 7, we have calculated what do you mean by input material and total purchase. And surprising, the total purchase also include the capex procurement. So it's not just the operating procurement, but the wider definition of procurement which has been approved in or which has to be taken. And this creates a deviation. So if you see the current provisions of schedule 3, while calculating the same number, which is number of days payable of days of accounts payable, you are using operating purchases as a base, and this creates a gap between your BRSR and financial. So you have to separately create this calculate this number based on the total procurement definition, and then redo that calculation. So that is a sort of gap which has been created after this guideline which has been published. Now there are other areas. The second area is concentration. Again, in the same openness of business, there are other areas where clarification is issued. The second is concentration of purchase, and as said, purchase has the same meaning across. So the purchase will have the same meaning, which is including the capex and everything. The challenge starts with the definition of trading house. So the number here asked is how much procurement you are doing through a trading house. And the trading house is defined as mentioned on the screen, is a specialized legal entity primarily engaged in business of export, import, domestic trade, goods, services. But the challenge is this tag is very difficult. It's not defined tag in Indian markets. Usually the trading house is associated with the export houses where they operate as 3-star trading house, 4-star trading house. but it's an expanded definition. It is also talking of domestic trade, not just export and import trades. So that's where the problem starts. And that's where it's very difficult to identify trading house today. And it's a constant problem across the industry. But that has not been answered. So that is something which might require further deliberation, come up to a conclusion. What do you mean by trading house specifically? So this is remains a problem. Concentration of sales. Again, this has been defined specifically for BFSI sector. What do you mean by sales? So they said you have to consider the total revenue. For other cases, it's simple. Whatever goods and services you have sold, you have to take that value as a sales value. They have also defined the term as dealer. What do you mean by dealer? So I think, again, not a very complicated thing. They have just defined it for a better clarity purpose. What do you mean by dealer and distributor? So that has been clearly stated. They have also defined what do you mean by related party transaction. So related party and related party transaction draw the same definition as of LODR. So whatever you are using in the LODR terminology, same definition to use. There is also a term which is known as investments with related party. So that has been further clarified. It means investments in related party. It doesn't mean joint investment. It means what investment you did in the related party. So that's just the clarification which has been issued again in terms of clarifying the number. So these are few of the attributes which have been announced, various different attributes which have been touched upon in that guidelines, and this comprises of the updated suite which will be used in the BRSR reporting this year. So apart from the guidance which have been published in last couple of years, that at the time of even change of framework, BRSR core came in with certain guidelines, certain information for auditors to audit. These are the additional attributes which has to be considered while reporting this year, and that's how these are the major changes in order to touch upon. So if I have to just summarize now, saying that how do you see the overall trend, whether it is going positive, negative? In last 3 years, this is the third year in which the reporting is happening. What is happening from a market perspective is, or definitely maturity is going up. So if you see the reporting quality, reporting maturity, it is increasing drastically across these top 1,000 companies. Versus first year, the second year report was far more mature, and the third year companies are more serious while they are doing the reporting. Especially with even if the leadership indicator, companies are keen on starting the leadership indicators, reporting on the leadership indicators, because now they're seeing their peers, they're seeing rating agencies getting activated. So companies have started taking it in the front front radar. There's also higher awareness now. Board is aware, CXOs are aware that the whole what is the process of this report, how data is collected, and so on and so forth. So there is a comfort which has happened overall in the organization. So these are two positive trends which are visible in the market. There's still some negative trends which are, or negative impacts or negative concerns which are still ongoing. The first is on data collection. So still the data collection still remains a challenge with most of the companies. You'll see several companies have started onboarding tech tools in this various spaces. They are using tech tools, they are using help. They have already established certain systems, but still the challenge remains, especially with the environmental data. The second concern is also greenwashing. So if you see, government is already only focusing on certain specified data from the overall BRSR, which also gives a sense in the market that the rest all data is just for the sake of reporting. That sense is going on as of now in the market, because government itself has picked up, SEBI itself has said forward and said these are the only data which has to be reported. But then what is the relevance of the other data which is published? It's a very data heavy report right now which is going in the market. So there are also higher chances of greenwashing, especially in the numbers like trainings, in the numbers like awareness sessions, and so on and so forth. There's no validation which is happening. Plus, if you see in general, LMS systems are not very strong in companies as we speak. So there's still that greenwashing element which can remain active, and there are high chances of happening that. The third is even the propensity to pay from, especially from our lens, from consultancy lens, from people who are interested in starting the services who are on the call. There is also a reduction in propensity to pay which has started, because companies have started adopting it in-house. They have started gaining expertise in themselves with respect to how to operate the BRSR. So that is again a new trend which we are seeing right now is in the space. And last is on the comparability. So comparability still remains a challenge. Although government is taking the data in XBRL format, they are not publishing it back into the market. So the data repositories are still in the hands of, let's say, for example, if I am a research institute, I am compiling it on my own, or the companies are taking pain to download all the information, compile it, digitize it, and then use it from a comparative perspective. But if you see mature markets like Singapore and other countries have already started this drive wherein the government published the data in the softer version, so that you don't have to digitize, you don't have to sort of bother on, and there are comparables available. So if I'm in a company in steel sector, if I'm a company in aluminum sector, I can draw data from the sector, same sector, and then start comparing that where do I stand at an average level, so that I can start getting motivated to take more initiatives to improve my stand today. So that is something which is not yet happening in the space. So these are some of the trends largely which are being which we are seeing right now in the market. Now, there's one more interesting document. I'm not sure many would have seen this document or not. There is there is a research which was conducted by NSC in association with CFA Institute, and they published this in public in October, I think, last year. And this will show you how data can create marvels. I mean, what they've done is they have picked 300 companies, and this is how they have segregated these companies and sectors. And I've also given the source of the information if someone wants to read. But what they've done is, interestingly, they've tried to draw interpretations from this data which has been published, and you will be amazed how this data can create marvels. I mean, I give you examples in the next slide. So just showing you the bifurcations. What they did was they've taken all the top 200 companies and then some companies in each bucket, 200 to 300, 300, 400, so on and so forth, and consolidatedly 300 companies with a market cap of around 20,000 crores overall market cap. So that's 21,000, 20,013 crores, and almost a very high share of market cap, which is what they have already covered. So that's how they have started this, and this is also a sector bifurcation, which you'll see that they have also covered various sectors in this whole segment. Now let's talk about some of the insights. The first insight was that if you see, BRSR report has the ability to be published in two versions. You can either do it in consolidated way or a standalone way. A consolidated version could be all your subsidiaries are taking also participating in what you're reporting, and a standalone is only you are taking the listed company and taking the data from the listed company and publishing. So most of the companies are only doing the standalone reporting since last 2 years. They have not evolved to consolidated reporting, except few sectors which itself, because of their structure, they are doing it. For example, real estate, for example, utilities. If you see real estate sector today, most of the real estate companies operates in a JV kind of setup, wherein, or subsidiary kind of setup, wherein they build a lot of companies and then their business is also spread in different companies. And these are the early adopters of consolidated reporting. Most of these sectors are the adopters, and there are ample data. If you go scan this link, you'll get all the information. The second insight which is coming out of from analysis of all of these reports is there is a very minimal representation of differently abled employees, and that is sad to see because it's only 0.5% on an average basis is being covered. And the report also states that overall population level there are almost 2.3 2.4% of employees which have been defined as uh, differentially abled employees. So out of the overall population count of 2.5, only 0.05% employees are employed right now in these top 100 companies. Again, an interesting interpretation was that post-COVID, the employee turnaround is increasing. And if you see the details I've also covered, in certain sectors, it's very high. So if you see communication service, almost 44% is the turnaround which these companies are reporting. In case of employee category, and in certain cases it is very low, like energy sector very low, utility sector very low. But on an average, if you see the trend is rising. So from 16% overall average to 22% is what the current turnaround looks like post COVID. So that is something which is an interpretation which has come out with the data. On sourcing perspective, also there is a question principle too, which says that how many percentage of supply is through sustainable sourcing basis. And an audited number, it will not go in the audit also going forward in BRSR. The companies are saying more than 77% of their procurement is happening through sustainable sourcing program, which itself is a very astonishing number, a very high number in itself. So that again sort of throws an insight on how procurement is happening, how they stop, these 100 companies are right now doing the procurement at that level. Now certain insights on energy data. So if you see, the good part is the overall energy intensity at the country level is going down. So top 100 companies, their energy intensities is going down, but their absolute energy consumption is going up, which also talks about growth of the country. So if you see, the growth was higher in these last 3-4 years. Hence, the energy consumptions within the organizations are also going higher on an absolute basis. But if you convert it at the per revenue level, it is going down. So per revenue, the intensities are falling, which is good sign from a net zero perspective. Again, from a sector perspective, if you see the highest sector obviously would be utilities, and the lowest intensity sectors are financials as usual, because financials have nothing major energy consumption is happening. Majorly the laptops and the ACs and lights which are running in the offices, that's the largest consumption, or server rooms which they consume. And the trend, if you see, more or less in most of the cases, you're seeing a downward trend wherein the intensities are going down. So that is on an energy data. Now coming on to emission, uh, first point is most of the companies are reporting scope 1 and scope 2 emissions. So almost 96% of the companies have already published their scope 1, scope 2 emission data. There's still some companies which are not reporting the scope 1, scope 2 data. They're reporting it as blank. In scope 3 also, the transition is high. Almost 40% of the companies have already reported on scope 3 data. Intensity is again going down per revenue. So 14% intensity reduction have happened in scope 1, scope 2, 25% happened in scope 3. And the interesting part is every one of three companies are also getting the data getting audited by an external agency. So out of 100 companies, 35 to 40 companies are already getting the data audited from an external auditor or external agency. So this is again something which is coming as a number. So, and if you see the map also on the side, sector wise, you will see the reduction which is happening: utilities, material, energy. The intensity year on year is going down in most of these sectors. And so as overall average basis also, you are seeing the intensity going down. Now this makes me end the first part, or the first part of the presentation, which is how the whole BRSR piece is evolving. With this, I will quickly try and move on to the second part of the day, which is the second part of the agenda on how the global frameworks are evolving. And there are several interesting changes which are happening right now in the global framework space as well. And how the evolution is happening, we'll just talk in a while. Just to tell you the overall perspective, and if you see the space today, this is how the space looks like from a framework perspective. Now you can divide the reporting, and when you say framework means the reporting framework, similar to your, let's say, INDES, which happens in accounting, or IFRS, which is there in case of accounting. There are various versions or modes in which you can publish a report on ESG as we speak. And these are usually divided into three broad categories. You have regulatory based framework. BRSR, for example, is a regulatory based framework, which is coming out of the regulation in India. Similarly, CSRD in Europe is a regulatory based framework. In Singapore, there is a regulatory based framework. In Hong Kong, there is a regulatory based framework. So these frameworks are frameworks which are adopted by the countries at their local level, regional level. Then you have certain global guidelines or global frameworks, global standards. Now again, you have two definitions: standards and frameworks. I will not go into that. But then you have global guidelines or global frameworks. These are globally adopted. It crosses across the boundaries of a country, and the adoptability is much higher with across the globe. So something like GRI, or Global Reporting Initiative, or IFRS today, or ISSB, which is IFRS today, SASB, IR, TCFD, these are some of the frameworks which are globally adopted frameworks, and they have a very high adoption at the global level. So usually, if you see Indian companies, they are publishing, if it's a big company and they have a lot of customers outside India or investors outside India, they're publishing two reports. One is BRSR, which goes in the annual report, and they're also publishing a sustainability report, which is aligned to a global framework. So that is a global framework. And the third is a sector specific framework, which are very, very specific to a sector. Let's say, for example, something which is related to banks, which is known as UNPRI, UN's Principle of Responsible Investing Framework. So this framework applies to only a BFSI sector and talks about their strategies, their implementation, how the bank is evolving on, especially on the responsible investing front. You have GRESP, which is an active framework in case of real estate space. So you'll see a lot of big offices, premises, they're GRESP rated today. And what GRESP does is they takes the data on a real estate model. So they have defined bifurcations on developer, builder, and so on and so forth, and they take the data accordingly and give the analysis of at that level. So these are sector specific framework. So you have regulatory, global, sector specific. Then you have taxonomies. Taxonomies are nothing but the standard names or standard, like we have an XBRL taxonomy. Similarly, you have you have a EU taxonomy. So EU taxonomy, Georgia SF taxonomy, and so on and so forth. That is taxonomy. Now, from a guideline perspective, there are certain global guidelines as well. World Economic Forum, UN Global Compact. These are guidelines. These are just the guiding principles which are there to adopt best practices. And then you have certain accounting frameworks, like for example, greenhouse gas accounting protocol. It tells you how do you account for your emission. You have PSAF, which is Partnership for Carbon Accounting Financials. So it tells you in terms of how do you convert the financial numbers and use them from a calculation perspective. So that's largely the framework space. Then you have a rating space as well. So when you talk about the rating space, it gets divided into multiple bifurcations again. So you have agencies like Bloomberg, Definitives, which collect the information. You have rating agencies which gives you the ratings, like for example MSCI. You have EcoVadis. I was also, when I started, as I told, that in India also there are certain rating agencies which are active, like CRISIL, CARE, uh, and then MSCI also is active in India. Sustainalytics, Dow Jones. These are some of the agencies which have their well-established ESG rating framework. So these are the agencies which give you ratings on the top of your reporting. And then there are certain agencies which draw conclusions out of the data and all, like Strava, ESG analytics, and so forth. And then you have data analytics aggregators. They collect the information from various different factors and then report. So this is the space of reporting and rating space. Now coming on to the overall framework. So if you see which framework is the most adopted framework, still the GRI remains the best. So most of the reports in various regions are reported under the GRI framework, and that's the most adopted framework as we speak. IFRS is growing at a very fast pace, which is nothing but SSB or ISSB. I will tell you why, because everything is now combined and running on one umbrella. But and if you see countrywide also, the adoptability is on the higher side. So most of the cases you will see, it's a study by KPMG, and they have covered top 250 companies and top 100 companies on each of these regions. And you'll see it is either constant or it is going up. Like, for example, in India, it is constant. 88% of the companies are reporting, it's still the same. But in 2 years, nothing much has changed. Same companies are reporting and publishing their reports. So which are, and they've also taken the stock exchange, which is as a regulatory framework, which I said there is a regulatory framework as well. So if you see Middle East, most of the companies are doing the regulatory framework. Every country has announced the regulatory framework. In Asia Pacific, uh, there is also a high amount of regulatory framework which has been announced. But Americas, you'll see most of the countries, they've just announced the general guidelines and they've said adopt a global framework. And that's why companies are adopting the global framework as per their comfort. Same as Europe. So that's how the whole bifurcation is right now. So the conclusion is that right now GRI outstands most of these global frameworks, but IFRS is on the rise. And I'll tell you the reason. And this slide shows the reason why IFRS is on the rise. So in 2022, what has happened was there are a lot of consolidation which has happened. So today you see already I've shown you so many different frameworks, and most of these frameworks were active in pursuing their own, improving their own visibility and trying to sort of outpace other frameworks. But with IFRS coming in as a center, so ISSB came in as a center, uh, and ISSB said, why not consolidate? So what ISSB did is they created a IFRS sort of agency in between, wherein what IFRS did is they first consumed some of the climate change framework, like for example CDP. They have absorbed TCFD, they have absorbed transition plan framework, which is under the same umbrella. They were running under the ISSB umbrella only. Value Reporting Foundation, integrated reporting, SASB standard. So SASB and integrated has been consolidated into Value Reporting Foundation. Value Reporting Foundation has been consolidated into IFRS Foundation. And IFRS comes under ISSB. So now there are only two broad major frameworks, three major frameworks which remains right now active. You have GRI, which is a complementary framework to ISSB. You have EU CSRD. I will talk about it in the later slide. So EU has their own framework, and EU is a big region in itself. So that's why EU CSRD is being shown separately, because EU CSRD has a bigger impact. So EU CSRD, ISSB, and GRI. These are the three core pillars which are right now most active in various geographies of the world. And as I showed you the reason, there's a lot of consolidation which has already happened as we speak in 2022, and that's the outcome right now of the consolidation. Now, quickly touching on some of these frameworks while talking, as I said, GRI is most used. GRI is known as Global Reporting Initiatives, and this framework focuses on all stakeholders, and it's like a platter. So you have various different standards like a accounting standard. For every topic you have accounting standard, you have to go to that standard, pick that standard, implement the standard. It is similarly the GRI is, unlike BRSR. BRSR, if you see, it's a standard report. It's a reporting structure wherein you have to go, you have to fill the whole report, irrespective of your sector, irrespective of your type of business you are into, you have to fill the same form. That's not the case with GRI. GRI is like a transaction based model wherein whatever is relevant, you go and pick that out and then report on that version. I'm just using a crude language right now to make everyone aware what is GRI, but it's a well-defined structure of how do you pick, how do you define, how do you report. Then you have something known as TCFD, or Task Force on Climate-Related Disclosure. This guideline was specifically designed to capture the climate risk. I'll talk about the climate risk in the later slide, but there's something which is known as climate risk, and which is growing because of change of temperature, rise of temperature. You are seeing a lot of physical risks changing, flash floods happening, heat waves happening, higher hurricanes, and so on and so forth. And all that is something which is there in the public information today. So TCFD gives us structure to calculate this risk arising out of these changes. So that is something which is known as TCFD, and it gives you a structure in which you calculate these risks at the base. Then you have something known as SASB, Sustainability Accounting Standard Board. Now this SASB framework is, and just to also, sorry, to come on TCFD again, TCFD is already absorbed. So TCFD is absorbed by IFRS, which I will cover in next point, but that has been already absorbed. There is no TCFD as we speak right now, it's IFRS. Then you have SASB. SASB is similar to GRI. It is also in the similar model. The only thing is that they have, instead of structuring it at the topic level, they have said they've done it at the sector level. So you will find a sector, you will check that sector, and they will tell you these are the information you have to publish if you are out of this given sector. So if you are a financial sector organization, you have to pick the framework which is related to the financial sector, and then you report. That's in the SSB space. Again, this has been also been merged in the Value Reporting Foundation, and it comes under IFRS right now. So IFRS owns even the SASB frameworks. Then you have integrated reporting. Again, this has been merged, and you will see a lot of Indian reports also using IR as a framework, especially larger companies. They're publishing their integrated report instead of annual report. And I think it is well known, the 6 capital framework, wherein you publish your sustainability divided into 6 different capitals, and you publish a consolidated report, financial and a non-financial report. This also comes under Value Reporting Foundation, owned by IFRS as we speak. So it is absorbed by IFRS, consolidated by IFRS. So going forward, all of this will go in HiveOff, and IFRS will only, which is what remains. That's why I was telling you that link. So, and IFRS, which is ISSB, they have come up with 2 standards, S1 and S2. S2 is the absorption of TCFD. So when I say TCFD goes off, S2 comes in. So ISSB, which is International Sustainability Standard Board, they announced the IFRS framework. And this framework, there are 2 different frameworks they've announced, S1 and S2. And largely this is from a build from a risk management perspective. So instead of let's say impact perspective, which is a GRI perspective, when you read the GRI framework, it talks about your impact on the outside world, your impact to environment, your impact to society, how are you operating and what impact are you causing. This talks the other way around. This talks of what risk you are carrying when you are creating this impact, and how do you account for it. The financial tone, which is how the IFRS is well versed with. So till the time you convert it into number, people will not realize they are doing wrong. So that's what the target of IFRS is. They want to convert every of this risk into a number, financial risk, and then bring it on the books so that companies started acting on those risks, which is not happening as we speak. Then you have something known as EU CSRD, which is EU's Corporate Sustainability Reporting Directive. This is the framework which is used by the larger companies, which has been announced by EU specifically, and it is mandated by EU to be used by larger companies to report, similar to BRSR. It is obviously it's a different version, different mode in which it has been structured, but it is in like-to-like basis. I mean, it is kind of a regulation which is like a BRSR regulation which has happened in Europe. Then you have something known as EU CSDD, so which is EU's Corporate Sustainability Due Diligence Directive. Now, similar to value chain reporting in India, EU has also come up with a supply chain reporting framework, and this becomes applicable to you conducting the due diligence of human rights and environmental impact across the value chain outside and within EU. So companies, if buying from outside EU also, these directives are to be implemented on the suppliers when they are procuring and sending the goods to EU. So these are some of the frameworks which are right now being talked about and being active as we speak. So I thought to just cover that out for you all. Now moving on to the next part, which is how the global scenario is evolving overall. So if you see what has happened after the Trump election is, first day he did was he moved out of the Paris Agreement. He terminated the commitment which US had with respect to Paris Agreement. It was a big blow from a commitment perspective, because US is one of the largest economies of the world, and if US comes out, other economies might follow them, and then uh, the whole derailment of the climate uh, activities can start happening, which is already being started happening in US market. Sorry.
Hi, Prakhar, can I take a minute from
Sure,
your
ma'am.
share?
Sure.
Yeah, so hello, friends. If you can stop sharing just for a moment.
Yes, I'm sorry.
Hello, friends. Good evening to everyone. And this is our first webinar after I'm taking charge as a chairperson of Sustainability Reporting Standard Board. And this is a series which will continue entire year. This Spark Demystifying Sustainability Catalyzing Growth, the name of the webinar series, and we are planning to have 50 such webinars over a period of time in this year. And I thought the best part to have Prakhar with us, because last year, Prakhar has really supported a lot to Sustainability Reporting Standard Board. An entire year, what the work we have done, the leadership what he has shown, and the talent. I thought let the members also know about that. So thank you, Prakhar, for being that. And the topic which is mandatorily required to be reported by top 1,000 listed companies, that is BRSR, we have chosen so that everyone knows about the same. So with that, we have called Prakhar, and the best part, he is always available for the work of the institute. So thank you, Prakhar, for being here. I also thank Deepali and Aman for being there to moderate the session, and Shweta and entire team of SRSB to support the Sustainability Reporting Standard Board. Friends, we are the youngest board, and we can say that the first and the foremost board of the world at ICAI. And we are representing the IFRS Foundation as a part of Advisory Forum of International Sustainability Standard Board also. And as regards to BRSR, we are taking a lot of initiative, doing a lot of work. We have also released SSAE 3,400. Recently, we have revised also. We have various publications. In the month of April, within say 1 week, we are launching the next batch of certificate course on BRSR. I invite all of you to join that certificate course also. Yeah, also along with this webinar, we will also have various physical programs also. We are also will be supporting the members and building the capacity of members in relation to the social audits and listing of NPOs in social stock exchange. So again, the next webinar, the topic is the global reporting. We have started with BRSR. Today is a Thursday. So every Thursday, we will have this series on sustainability, and we are the people who have actually said, Sebi, we should, the sustainability is a piece for our members, and this is how it is. With these words, I welcome all of you and wish you a very, very happy learning. So thank you very much, and over to you.
Thank you, ma'am, for your kind words and always motivating me to participate in several initiatives, and I'm sure we could make marvels again this year. So hoping for that as well. So coming back to the presentation again, guys, I'll just quickly reshare the screen, and I was talking about Trump specifically, and yeah, so I was on the point that US pulled out, and then this has created a lot of impact across the adoptability, and this has a potential to, right now the impact is not being visible, but it has a very high potential of creating impact of companies adopting sustainability, especially in the US market. So already if you see news, there are a lot of news which are coming out where companies have pulled out of climate initiatives, or even at the corporate level, this whole wave have started, which can impact very drastically the overall, the commitment of at international level, which has happened. Trump has also pulled out of WHO, which was also a big shock. Even I mean that when news came in, it was big shock for everyone across, because although Paris Agreement was well preempted, but not was WHO, but that happened. So that is something which has happened in USA. The other bigger market is Europe. Even Europe has also sort of realized that there is a requirement of ease of doing business similar to India. And right now there's recently a proposal which has been announced in the parliament. It's known as omnibus proposal, again not has been approved as we speak, but what they've done is they've also done certain relaxations in the overall reporting space. So first was on the reduction of threshold for the companies. So companies on which the CSRD was applicable has been reduced. The threshold has been reduced to ensure that it doesn't impact the smaller business houses. The second thing what they did was they've pushed it further 1 year. So especially for the wave 2 companies, they've pushed it to year 28. And even the CSTTT guideline, which is getting the due diligence for supply chain partners, they have also pushed it to 2028, which is applicable from 2027 earlier. So these are the two things they have done. They have eased out these guidelines and then given more time for the industry to adjust. CBAM, which is known as Carbon Border Adjustment Mechanism, I again talk about it later in the slide. What they've done is they have also reduced the limit. So they have said that they've introduced the limit. So they've said that any importer which is importing less than 50 metric tons of product will be out of this guideline. And I will talk about this guideline when go in the climate related frameworks. I'll go into that in a couple of minutes. So these are some of the global changes which are happening as we speak on the reporting space. Although you'll see a lot of consolidation, a lot of push, but on the other side, even the voice is on how to reduce the pain of the industry. The US, which has been going out of all of these regulations and so on and so forth. So, in this whole process, what is happening is the IFRS adoption is also growing, and the global frameworks have been sort of steady and forwardly being replaced by a consolidated guideline of IFRS. So if you see right now, there's already announcement of several countries which have done. So you'll see a lot of even Asian countries like Pakistan, Bangladesh. You'll see other Asian countries, Malaysia, which have announced their adoption. Sri Lanka, which has announced their adoption of IFRS already. And if you see the green lines, these are the audits which have been announced. So not just adoption of IFRS, but the audits of the reports can also be parallelly announced by some of these countries. And some are in progress. For example, Singapore is in progress. Very soon you will see Singapore being started. Hong Kong is also in the same pathway. Hong Kong will start its reporting in a while as well. So a lot of neighboring countries have started moving on IFRS. So India can also sort of see this wave coming in. Not as of now. Right now, there's nothing closer even going on as we speak with respect to IFRS adoption. So that is on IFRS front. So this is largely to give you a perspective how the world is moving on this reporting space and how India is pacing it up. The last but not the least is on climate reporting factors. So if you see on the climate reporting front, what is happening on the climate reporting perspective is that that there are if you divide the climate reporting, you can divide it into 4 broad categories. You have the first is the emission reporting. That how do you report some of the emission factors? So you will calculate. So there are, when I was explaining the frameworks, I told you about GHG protocol. That protocol is used to do the calculation first on ground. So you calculate scope 1, you calculate scope 3, you calculate scope 1, scope 2, scope 3, which is your emission happening outside into the environment. So you are doing the calculation first, and there is a guideline accounting methodology available to calculate. The next thing which happens is climate risk reporting. How do you define your risk, growing risk? Let's say, for example, this year when the summer comes in, there might be a potential of that during the peak summer season, and especially in the northern regions, we might hit a very high climate conditions which are not favorable for laborers to work in an open without shed environment. So that could impact you, that could impact the businesses going forward. So whether that risk is there in your business, and have you taken proper mitigations, proper insurance are in place with respect to flash floods, all that comes into the consideration when you talk about the climate risk reporting. So first of all, identifying these risks, whatever example I told you was on physical risk, but parallelly it could also be in the transition risk. Let's say, for example, if a company is into automobile space, what if government bans diesels? What if there might be some harsh regulation which can come on coal import and so on and so forth? So all that is your transition regulations, which is change of law. So if anything of this happens, how prepared is your business? Whether you are having a business continuity plan in place, whether mitigations are happening or not, that is the purview of something like IFRS or even CSRD. So this is a mistake there. This is erstwhile TCFD. It's not CSRD. Erstwhile TCFD is what IFRS S2 is. So that's the guideline S2 is published. And in India also, even RBI and IRDA has taken a stand and they have published a draft circular which has to be adopted by the bank. So they have given a pathway, right now not announced as a mandatory reporting, but a discussion document has been put in place wherein for first year NBFCs, banks, there has been they have been announced, they have to announce how they will adopt all of these guidelines while they are giving the loans, they are giving the money on table, they are investing. How do they align all of these guidelines and how do they ensure that money doesn't fall? The money doesn't have higher credit risk or a liquidity risk because of changing climate. So that is which it has already been started being from an adoption perspective in India. Several companies are also doing this. Companies which are having a lot of physical locations, companies like, let's say, Indigos of the world, Godrej, any bigger conglomerate, Reliance, they have already started doing this risk assessment at their level to understand what is their impact of business, how their business can get impacted, and this is actually live on ground. They're trying to understand what insurance has to be taken, what is the value has to be grown up, down, any other precautionary measure which has to be taken to ensure the business continues. The third is product level disclosures. So interestingly, this is something which is also on the rise. There's something which is known as carbon border adjustment mechanism, which I was referring to, which is being announced by EU. So today what EU has done is specifically in 6 sectors, right? From iron and steel, aluminum, cement, hydrogen, and a couple of more sectors. What they've said is anything which is hitting the borders of EU, which is, and they've given a list of products, they have defined the list of HSN codes which will be impacted. If anything from these HSN codes hits the borders, you have to do a emission calculation of that product at the unit level. Let's say, for example, you are selling a structure made out of steel or iron and steel. You should have a number first of all calculated that what is the emission embedded in this at the per ton level of steel when you are exporting it to EU. The importer has to then submit this information in the portal in the EU, and then going forward, right now the tax is not activated. Going forward, there would be a differential tax which on this import transition which has to be paid based on the emission which is there in these products which have been exported. So that has to be accounted for while you're sending, and that's the guideline which has already been implemented. It is active. The only thing which is not active is payment is not being started right now. Only calculation is active. And similarly, green steel. I was talking of the green steel guideline when we started the discussion. So in the green steel guideline, the same guidelines have been published. So if your steel is having a carbon emission of 2.2 tons per ton of steel, 2.2 tons of emission per ton of steel, then it's a 3-star green steel. If it is, let's say, the next category, the last category is 1.6 tons, I think, if I'm not wrong, 1.6 tons of emission, then it's a 5-star category green steel. So all these disclosures are happening at the product level, not at the company level. So that is the third level of carbon accounting or climate reporting which is happening. And the last but not the least is on the carbon credit scheme, green credit scheme. So for example, how do you purchase credits? How do you generate credits? Which is the absorption methodology. So for example, I put a carbon absorption plant. I'm doing forestry project. There was a barren land. I have converted it into a forestry project and I'm now absorbing carbon emissions from that investment. How do I monetize it? How do I convert it? There are well-established guidelines across the different countries. India is yet to come up with a guideline that is under draft stages. Again, hopefully this year we might see these guidelines also coming out in the mainstream market. So this is something which is different ways and different versions of climate reporting. Last but not the least, very quickly, I would like to touch upon net zero frameworks and then I'll take questions for next 10-15 minutes. So last is on net zero framework. How do you announce net zero? There is also a framework. There is also a methodology in which that you have to adopt to announce a net zero framework. What is net zero? Your pathway when you say that at the corporate level or at the company level, I will become net I will absorb more carbon than generating carbon into the market. So that is the situation which is known as a net zero situation. Like, so for example, India's net zero situation is 2070. India has taken a target of going net zero by 2070. So by 2070, India will absorb more carbon than it generates. That's the target India has taken. So now there are various agencies or frameworks which has to be incorporated while taking these targets. The most used is SBTI, Science-Based Target Initiatives. It's an independent agency which happens. It has a portal. You can go and check name. You can put the name of the company and then it shows what that company has taken as a target. So it's a transparent portal and it's a independent agency where you have to apply. So you have to first apply. You have to give all your calculations to the agency. They validate your calculation and you have to give the targets into two parts. First is a near-term target and next is a long-term target. And based on this, then you have to define what is the pathway you want to take. And the target has to be divided into scope 1, scope 2, and then scope 3 emissions. So that is something which is known as science-based target initiatives registry. Similarly, you have UNFCCC. So United Nations Framework Convention of Climate Change. Again, this is again a framework wherein you have to apply, you have to define, they have given a directive. In that same directive, you have to start calculating the target and then announce that you are following. And then you have an ISO in place, which is known as ISO 14068. This also follows the same methodology wherein there is a defined principle. You have to adopt a principle, call an independent authority, get that who is an ISO approved authority, and get your claim approved by that authority, and whether you have followed that route or not. The most accredited right now is the Science-Based Target Initiative. Out of all, there are further more, but I've only covered these three broad agencies. That's it, friends, from my side. I just wanted to touch upon all the different frameworks and their approach, their growth. I hope I could deliver what was expected. Over to you, office, for the questions.
Thank you, Prakhar. It was an excellent session. Even though the subject being so dry, you have made it so interesting, and the way you reported everything, the draft you showed, how the things are to be reported, the tables. Thank you so much. I'll take up some questions which are being posted by the participants. So the first question is, what is meant by global ESG reporting?
So, I mean, similar to, and I think there was a slide which was showing that also. I'm not sure whether that question was before that or after that. But quickly to answer, there are frameworks which are applicable. As I was touching upon, BRSR is a very Indianized framework. Indian agencies have adopted that as a structure, but globally there are different modes and methodologies in which you report your ESG progress. So that is known as a global ESG framework, which is largely adopted globally. It has a global adoption. There's no defined term, but that is something which is used as a part of process.
So does it mean that whatever in India we do the ESG reporting, the globally it might not be accepted because, as you mentioned, that it's more of an Indianized thing?
It's not that it will not be accepted, but the language might be different. So, for example, if I compare a report with a GRI report, GRI energy data comes under something in GRI, let's say 301. I'm just taking example 301 disclosure 1. If in case of India, it comes in P6 disclosure 1. So if someone is comparing, it's difficult for him to compare. You have to search, scan, and then he might have questions that even the calculation methodologies might be different because you are using a different way of reporting. So numbers, although is similar, there is also interoperability. If you see, go on the GRI website today, they have published an interoperability document with BRSR. So it links all the questions of BRSR to GRI. Similarly, there is an interoperability framework with SASB and also. So there is, all global agencies are working in sync. The only thing is that acceptability from an user easiness perspective, it's better to use the same tone which they understand.
The next question is whether it is mandatory to mention electricity consumption in joules instead of kWh.
So there are two things. If you read the disclosure, there are two different types of disclosure which is being made. One is energy consumption. The term is used as energy consumption. When you say energy consumption is reported in joules. And energy comes from not just electricity. It could also comes from usage of fuel. Let's say, for example, I'm using diesel, I'm using petrol, I'm using natural gas. So there are different bases in which the energy is being used, is being generated. In BRSR, you have to take all of these fuel sources and then report the energy. So it's not just that electricity you are being reporting in the energy consumption, you are reporting all the other fuels also. So joules is taken as a base of energy when you are reporting the energy consumption.
What one source would you recommend that we explore to learn more, like a book or a tool or a concept? So what would you recommend?
I have tried and used. I've given you all the links in my presentation wherever possible. So I think when you use the presentation at the relevant location, you will find the link. Even the disclosures which are there, which have been published by the industry forum, they have the links. And I think the best sources are to learn the BRSR is the certification course, which Preeti ma'am just now said. I think that could be the best way to start the journey and understand about the BRSR.
Okay, thank you. Today being the AI world, is there any software available in market wherein the raw data can be punched in and the report is auto-generated?
There are various softwares. There are, if you go through, just type ESG tools today, you'll find several tools, and most of these tools have embedded the methodologies of using AI in various versions. Like for example, you'll find tools when you have to just scan your invoice, it picks up the consumption value from the invoice and then convert the emission directly and then report. So all of that efficiencies are there in the tool, but adoptability varies. How much you are exposed to your data might be restrictive. These tools might also have restrictions on taking the data out and storing it in an outside cloud, and also adoptability, and also
Right.
adopting a tool is also, you have to be in consideration with your tech team and then take that call. So but there are a lot of options available. A lot of AI usage is already being started up.
Okay, thank you. Over to Aman for the next set of questions.
Thank you, ma'am. So, Prakhar, I think that was a very explanatory session, very insightful. However, there are a few more questions that I'll take you through. So, one of these questions was basically, are the contract employee costs that are basically paid to contractors for laborers, does that form a part of the employee well-being cost?
So any payment in terms of out of these 5 heads, I've given you those 5 heads. It has
Right.
to come under those 5 heads only, or an health and well-being expenditure, which is being defined separately. Only these costs
Right.
comes under the well-being cost. Apart from that, nothing comes under the well-being cost. So if you're paying a contractual employee, contract cost and all
Right.
that doesn't comes. If you're paying under any of these 5 heads, you're paying him separately. Let's say, for example, he's on a maternity leave, she's on a maternity leave, or a paternity leave, he's on a paternity leave, and still you are paying him the money, then you can account it for in the well-being expense.
Okay. The next one is there any guideline to estimate wastewater discharge by the industry, whether Indian or international?
So usually what happens is, when you talk about industry, especially plants, it's always being said that they should have proper meterings in place, because it's very difficult to estimate anything at the industry level. It can vary on type of process, production process, and all. It is not also prescribed as well. So it is not prescribed.
Okay.
It is not even prescribed as well. So at the industry level, it is prescribed. Whenever you are at the plant or in a manufacturing setup, it is prescribed that you calculate it on the ground, because it in no possible condition can be estimated, at least on the spend basis. And that's why if you see the clarification also which has been come in, largely focusing on the offices. That's where the major problem was till now. I mean, because there it's very difficult to put up meters. The premises are rented. You don't have a fixed lease line. In certain cases, it's a common line which is coming to you. You can't cut it out and put meters and all. That's where the larger problem is. So rest all is not being considered as a problem. It is only that you're not putting the meters in place. You have to put the meters in place. That's the only solution which has been sort of well accepted across. At the industry level, you have to have proper meters in place.
Okay. There's another very specific question. Can salaries that are paid to the health and safety staff be included in the well-being cost?
How do you attribute? If you can attribute at the employee level, then potentially it could be, because again, it is not defined We are taking assumptions. So usually the cost which should in general premises should be taken is where you are directly attributing it to the employee, as in, for example, you are putting up a health checkup camp, you are putting up a separate a temporary facility for him for that purpose, because usually OHS, this could happen very regularly in an OHS facility. Let's for example, if you see even the examples which they have given, these examples are usually the non-occupational health and safety related examples which they have given, not the occupational health and safety related examples. So there are certain bare minimum thing which you have to do. There's nothing which can skip, and that is not largely attributable. When you take any additional measures which are non-occupational in structure, that you can take it up.
Okay, so there's one question from the chartered accountancy point of view. Can you pinpoint any specific areas or specific topics of BRSR where CAs can actually learn more and provide consultancy to listed companies? And can this be a specialized practice area from our point of view?
See, I think governance is best suited. I mean, the least difficult area to start with. But there's no such area which is a specialized area which can only be taken by, or which cannot be taken by. I'll put it the other way around, which cannot be taken by a CA. You have to, as I said, even the most complicated area, if out of the whole BRSR, is P6 from a CA perspective, if you have to define. But that is very easy. You have to just, there are pre-described guidelines, the well-described accounting methodology available. You have to just read and crack it down. That's the only thing which you have to do. And it's not a very big science, at least at the basic level. You can understand how to calculate emission and do that activity. So to answer, I mean, I'll generalize this and I'll answer the most complicated probably area is to calculate emission. The fastest adoptability can happen on the governance front, because if you see largely there are gaps on the governance perspective. And if you read closely the BRSR, the management principle, it has prescribed a methodology which has to be followed while putting the sustainability governance in place. And if the best part is, if you read the global frameworks, more or less every global frameworks is also aligned and talking of the same language, which the BRSR is strongly suggesting. So the first and foremost, the easiest area is where you can hover on is setting up the policies in place, procedures in place for the organization, giving the structures to them, how to operate this at that most relevant level, and then also mature it to the rating. So eventually the value will come from the rating, how you can improve the rating of the organization, eventually where the value lies. So today, that's how you can correlate it. So although you are doing best reporting for the organization, they are getting lower scores on the rating, they might not value you. So you have to also correlate it with the rating, eventually how you will improve the rating, how you can advise the client to where he should put his money, where he will get the best value from a customer perspective, from a rating perspective, from a even the climate goal perspective. If the goal is to improve the betterment of the climate, where the best value can be attributed, I don't know any other than a CA which can guide a company, which is a cost benefit analysis straightforward. So we have to just expand our horizon. Benefits can also come in other than financial mods. So does expense. So it could also be an impact which can come into the study. It could also be a financial impact. It could be non-financial impact. It could be a financial benefit. It could be a non-financial benefit. You have to just expand.
Right. So just to continue on the same point, this is from a student's perspective or a younger CA's perspective. Since you are a GRI certified and an ICI certified professional, how do you get a certification on such matters which are very specific to sustainability or very specific to ESG that can actually help someone build a career in consulting in this field? How does that go along?
See, I think I already answered a bit of it in my last answer. You have to start picking up the new areas. There's some limitations with respect to what has been taught. What has been taught you already. There you have to start taking the courses like this BRSR certification course, which becomes the first stepping stone. Even when I entered in this as a part of this practice, even I took that course, and that helped me to make a basic level of understanding from a framework perspective. So there are various moving pieces which you have to start solving. The first and foremost, the best moving piece is framework. You have to understand the intent of these numbers which have been published, in which that's why I was trying to cover that, how you can interpret some of these numbers. What is the value of these numbers which have been published in the market? How do you interpret emission number as compared to your industry? How do you compare even the turnover number as compared to industry. So
Right.
there are a lot of questions which can be generated if I properly put an analysis on all of these numbers. So someone has to go that second layer. It's not just numbers, it has a story. So that story has to be picked up, well represented at the board and management level, has to be told them that these are the, as I said, values or business values which can be generated. So to answer again your question, the starting point is absorbing a framework, getting to the intent of that framework, and then build skills one after the other. So once you execute, let's say, a basic BRSR, you will get hands-on with the carbon accounting. Once you do that, you will get hands-on with climate risk assessments. There are courses further available to help you out.
Okay. So that's all from my end. Prakhar, thank you so much for your time and your effort. I'll hand it over to the ICI team. You can take it forward from here.
Thank you, Aman. Thanks for your
Thanks, Prakhar. Thanks,
efficient coordination.
thank you.
You are on mute, man.
I think Dipali ma'am is not audible. Um,
Uh, Hello.
yes, ma'am. We can hear you.
Yeah, yeah. The ICI committee shall take it forward from here.
Hello, Amanji, I am audible?
Yeah, I can hear you. Yeah.
Yeah, we would like to thank from entire team to our today's speaker Prakhar Gupta ji, Aman Atra ji, and Dipali Mehta ji for joining us today, and all the participants who have joined. We would like to have your participation in the upcoming webinars. The information is available on www.ici.org. Keep on visiting our website and get the information of the upcoming webinars. Thank you.